Have you ever wondered, can a company borrow too much to grow? In Malaysia, many firms in construction, property, and industrial sectors heavily rely on debt to operate. But at what point does this financial leverage stop helping and start hurting performance? Hi, my name is Yasni binti Muhammad, a final year finance student, and my final year project investigates the impact of financial leverage on firm performance in Malaysia's high debt sectors using a threshold model approach. In simpler terms, I look at how company debt levels affect their success, measured by returns on assets and equity, especially in sectors with naturally high debt. Using data from 150 listed companies of high debt sectors in Malaysia, including manufacturing, construction, and tourism over 5 years, I applied the panel threshold regression model. This technique helps us detect if there's a certain debt level which is a threshold after which performance declines. Move on, I use 4 leverage indicators, which are debt ratio, debt to equity ratio, short-term debt, and long-term debt. The results, all 4 show the same pattern. When leverage is low, performance improves, but beyond a certain point, it declines. My findings? Yes, there's a tipping point. When the debt to equity ratio and debt ratio stay below the threshold, firm performance improves. But once companies cross the line, debt becomes a burden, returns drop, risk rises. For example, firms with the excessive short-term debt tend to suffer from liquidity pressure, which negatively affects profitability. Similarly, long-term debt helps at first but becomes harmful when interest obligations outweigh returns. Interestingly, I also discovered that firm size matters. Larger firms can handle more debt before reaching the danger zone. Smaller firms, however, hit the threshold much earlier. This research is important for investors, managers, and policymakers. It shows that leverage is a double-edged sword. Use it wisely and you grow. Use too much and you fall. In conclusion, optimal debt levels vary, but the message is clear. Understanding your leverage threshold isn't just good finance, it's smart survival. Thank you.